It has finally blown into the open for all to see. The stock market has been broken for a long time. The idea that the stock market is where price discovery takes place on a rational, transparent basis with ups and downs and some amount of chaos. But free of rampant manipulations, that idea has now totally imploded. What has been visible for a long time but now blew into the open is just how manipulated the market is. By all sides, how over-leveraged the big players are because the Fed encouraged them to. And how enormous the risks are and how crazy the trading strategies are. And the stock market soared to record out of whack valuations, in a terrible economy where at least 10 million people have lost their jobs and are still out of work. And where entire industries have gotten crushed. The whole thing is propped up by stimulus and bailout payments to consumers and companies alike. And then came a new force, or rather the force wasn't new, but the magnitude was. Regular folks ganging together in the social media, particularly on Reddit's Wall Street bits, and they were deeply cynical about the fake markets, and they saw an opportunity, and they conspired to make a ton of money and push some hedge funds over the cliff by buying long the most shorted stocks. In other words, they conspired to engineer a historic short squeeze. This coordinated buying by the crowd on Wall Street bits of a handful of small most shorted stocks drove up their prices sometimes by 100% or more in a day, which pushed the hedge funds that were short these stocks to the brink. And it pushed online broker Robinhood to the brink. And it revealed for all to see just how broken the stock market has been. Hedge funds have long done everything they could to manipulate stocks their way. Short sellers came out with devastating reports about a company. Some of the facts were true and some were false, but it didn't matter. This is the game of short and distort. The thing is, as long as the shares are manipulated higher, everyone is good with it and regulators support it. It's the oldest game in town. The Fed is a big proponent of it through its monetary policies. It has a word for it, the wealth effect. President Trump jumped on the bandwagon as soon as he was elected. Everyone's doing it. But now that millions of individual investors are conspiring on Wall Street bits to drive up share prices of the most shorted stocks to push a bunch of hedge funds over the cliff, it rattled some nerves. But these traders are collectively also taking huge risks, and in the process, they were just about to push their own trading platform Robinhood over the cliff. So the blame for the enormous risk appetite out there, the reckless leverage, the crazy trading strategies by hedge funds, and the huge incentives to manipulate goes to the Fed. It printed $3 trillion in a few months and $6 trillion in 12 years to create exactly those kinds of financial markets where no one cares about anything anymore, where everyone is just chasing after the wildest returns, and where investors that follow prudent strategies are ridiculed and earn near zero returns. And that's what the Fed got. That's where the blame is. The Fed is the biggest market manipulator out there. Its primary target are the credit markets. But it has a strong effect on the stock market, and the Fed knows that and counts on it as part of its monetary policy. It made clear it wants asset bubbles. It wants blind exuberance. It wants reckless risk-taking and huge leverage, and it has shown that when those bets blow everything up, it will step in and bail out the biggest bettors. Whether or not the Robinhood fallout can be contained remains to be seen. Congress is now seeing a dual opportunity. On one side, the millions of infuriated retail traders that got locked out from trading the most shorted stocks. And on the other side, the teetering hedge funds are making their rich clients and owners extremely worried that something's not right. Meanwhile, Fed officials from Powell on down have been busy deflecting criticism that their reckless monetary policies have caused this kind of crazy exuberance and risk-taking and leverage across the board, from smaller traders to over-leveraged hedge funds. What all this shows, for all to see, is just how massively the stock market has been manipulated from the Fed on down. Most of these manipulations attempt to manipulate prices up, but some manipulations are aimed at pushing prices down. What the millions of people conspiring on Wall Street to exact their pound of flesh accomplished was nevertheless enormous. They showed for all to see just how completely broken the stock market is. Now that it's plain to see, hopefully you have minimized your exposure to this rigged Ponzi scheme system. The cat's out of the bag now and it's no putting it back in. The emperor never had on clothes, but now the average Joe and Jane knows. While the manipulators are playing the paper and contract game, I hope you are doing the complete opposite. As always, this is not financial advice, but if you have been tuned into this channel for a while, then you know what I'm going to say next.